Good Monday morning. Thank you so much for joining us today. I'm Marlon Bowling with you, and I'm joined by Brian Hoops, president of Midwest Market Solutions, as we get ready to start a brand new trading week. Brian, thanks for joining us here. As we look at our overnight trade, things were kind of mixed. They didn't seem to have a whole lot of sense of direction, although the corn market did firm up. And I'll go ahead and bring up the corn prices here, and we can talk about this a little bit. I'm guessing that maybe the trade anticipates that maybe that was not enough rain that went around. Are they looking at drier forecasts, or why is the corn market higher overnight?
Yeah, definitely. Corn market is seeing a lot of strength overnight, Marlon, led by that December contract. I think the best you can say the rains were hit and miss, very spotty. Some areas received some really nice rainfall. If you look like at Spencer, Iowa, Northwest Iowa corridor, 2 to 3 inches in some spots. So they will get through some of the heat that's coming here pretty nicely. Sioux Falls, South Dakota receive rains. Yankton, South Dakota, where we have an office, received some rains. So it's kind of along that I-29 corridor, but it was very hit or miss in other areas. And we're looking at much warmer temperatures by next week, or even this weekend. Temperatures are going to be on the rise, and so that's when the soil moisture levels are going to become critical. So then rains become even more important, and that's what the market's trying to figure out. Is we did receive some rains in some areas, not enough really to get us through this heat that's coming, and so we're putting some premium into the corn market now. December has not taken out last week's highs, so that's a little bit of concern for the technical trade in the community. If we can't do that early dealings this morning, I would expect it pulls back a little bit and seeing some profit taking. But July corn did trade above last week's highs. November beans showing very strong technical strength as well, maybe because of the concerns about longer term what is happening with the weather forecast and the lack of subsoil moisture, and the fact that we're having a very tough time breaking out of this dry weather pattern. April, May was one of the driest on records for most of the Corn Belt, and June is shaping up the same way, and July doesn't have a lot more promise. But as we've seen in the winter wheat belt, things can change in a hurry. It went from a drought to now they need the rains to stop just to get into harvesting of their winter wheat crop.
So Chicago wheat was higher overnight as we look at the prices on the board. But if you look at Kansas City, it was weaker overnight. It doesn't necessarily all seem to line up. How come?
Yeah, I think they're doing a lot of, we've seen a lot of spread trade between the hard red wheat and the Chicago wheat contracts. I mean, that spread got over $2 the July versus July at one point in time. Which is pretty unprecedented, and they're correcting that spread now as we're getting closer to the harvest time frame. They went from extreme drought conditions in Kansas, Oklahoma areas to now where there's more rain in the forecast. Now the heat is coming this weekend. There could be 100-degree temperatures in Texas up into Oklahoma, and if it doesn't rain, that'll bring that harvest season along real quickly. And I think the Kansas City market is kind of being prepared here with not moving sharply higher, just being kind of tepid in as far as price movement because of that impending harvest that's going to begin.
Yep, I say it every year. Once you hit 100 degrees, the wheat harvest is never far behind. Well, let's run through these prices then and how we settled overnight, shall we? Let's go to our quotes provided by Bar Chart. And as you mentioned, corn was higher, led by the new crop. So July was up 8 1/4 this morning at 612.5. December was up 10 3/4 cents. And on soybeans, you had July down a penny at 13.85.5. All the other months, though, were higher, and you had November up a nickel in the overnight trade. And on the wheat market now in Chicago, as I mentioned, we were higher, but only fractionally. July up 3/4. In Kansas City, that same July contract there was actually down 3.5 cents at 7.94 1/4. And in the spring wheat trade in Minneapolis, you had July up 3/4 at 812.5. And for good measure, we'll include the cotton. July was down 60 points at 83.44. We'll come back and talk about our livestock trade with Brian Hoops right after this. Come on back. All right, we're back, and we're talking with Brian Hoops of Midwest Market Solutions. Now, just to recap where we finished last week on the livestock trade. Well, it was kind of a topsy-turvy finish. We had the August live cattle finishing 40 lower Friday at 171.85, but the deferreds beyond that were actually 10 to 25 cents higher. A little bit of an oddity there. Now, if you look at the feeder cattle trade, we ended up after having some really wide swings. August closed at 239 even. That was 35 cents higher. But that doesn't tell the whole story. We got as high as 240.90, almost hit 241, but as low as 236.82. And then we ended up at 239. Wow, that was a wild ride. Didn't change too much when it was all said and done. Now, on the lean hog trade on Friday, we had that July contract $2.42 higher at 89.62, and that was over $2.50 off of its low of the day, within 60 cents of its high of the day. So, man, that was a bumpy ride to say the least last week. And then we get to the livestock summary, and I want to get Brian Hoops' impression on this. Let's bring that livestock summary up. We had a range last week on live cattle, cash cattle out in the country. 180 to 181, and dress basis cattle 290 to a top of 304 last week. Multiple dollars higher. Brian, it's getting to where we have to count the gains on this cattle market out in the plains by 5s and 10s nowadays.
It's a very bullish market the last 2 weeks. We've seen huge gains in the cash market, $10 to $12 last week and another $5 before that. I don't think we're going to see those type of gains here in the next week or two. There is some talk about pushback already starting at the retail level. A lot of times our summer highs for retail prices are done by the first part of July. So, next couple of weeks, we would expect to see those highs being posted. And then demand starts to slip a little bit after the 4th of July, and that retail demand and those highs that are being made. So right now, cutout values have really ramped up with the holiday short and kill week with Memorial Day. I've not heard if a lot of plants are going to be dark next Monday. It's a federal holiday, no trade next Monday for the grains or the livestock, but I'm not sure about the packers, if they will cut their kills or not. That would help out their margins, but it would slow our kill speed down. In fact, last week was a full kill week. We were 50,000 head less killed than we were just a year ago, excuse me. So, packers are trying to control things with a little bit slower kill speeds, and they may use next week's holiday an excuse to do that to kind of keep these cash markets gains from really exploding even higher this week.
Well, that's an interesting take on things. All right. Well, thank you, Brian, for offering that up. I appreciate it. We'll talk again real soon. Brian Hoops of Midwest Market Solutions. He's in Springfield, Missouri, where, Tammy, I think they got a little rain. Did you get rain?